Talk about indicators, they can basically be divided into trend indicators and oscillators. Both of these types have their own usage and advantages. Trend indicators are used to identify the trend on a particular time frame. And the oscillators are used to identify overbought and oversold areas on the price chart. These overbought and oversold levels are potential reversal points. Oscillators cannot identify the trend, and trend indicators cannot identify these reversal points. Now, what if I told you that there is an indicator that has the properties of both the trend indicators and oscillators? That indicator is called as the CCI indicator. In this video, I will be sharing the way I use the CCI indicator. But before we start, be sure to hit that like button and subscribe to our channel so that you don't miss on any of our new videos. With that being said, let's get into today's video. The CCI indicator was developed by a technical analyst named Donald Lambert. The indicator was initially developed to spot long-term trend changes on the commodities market. Hence, the name CCI, which stands for Commodity Channel Index. Despite the name, the CCI can be used for any asset and not just commodities. Today, traders use the CCI indicator on all types of timeframes and not just long-term charts. Long-term traders or investors can use the CCI on weekly or daily charts, while short-term traders can use it on any timeframe according to their risk appetite. So the big question is, how does the CCI work? The CCI indicator compares the current price to the average price over a certain period of time. The indicator has no limit, but generally speaking, the value of CCI fluctuates from -200 to +200. Approximately 75% of the time, the CCI line will revolve between +100 and -100. The other times it will be above or below that range. By default, the CCI period is set to 14 or 20 based on your trading platform. Personally, I like to use it on a 20-period setting. You can play around with the period settings to identify the best for yourself. For the sake of this video, we will stick to the 20-period CCI. So, how do we interpret the information extracted from the CCI indicator? We will use the CCI indicator for the following. Number 1, identifying the trend. Number 2, identifying specific entry points to enter the trend. Number 3, identifying potential reversal points where the trend might come to an end. Now let us elaborate on each of these points. First, let's begin by identifying the trend using the CCI. Simply put, if the CCI is trading above the zero line, then it is said to be in an uptrend. And if the CCI is trading below the zero line, then it is said to be in a downtrend. The problem here is, if the CCI crosses from negative to positive, should we immediately consider it as an uptrend? No, that would be a quick judgment. Because sometimes the CCI may pull back to zero line to continue the downtrend. Therefore, a good approach will be to wait for the CCI to sustain above or below the zero line to confirm an uptrend or downtrend. So, we will only consider the price to be in an uptrend if the CCI has been above the zero line for about 8 to 10 candles. Similarly, a downtrend will be confirmed only after the CCI has been below the zero line for about 8 to 10 candles. For instance, look at this chart. Here, we see that during this time period, the price was in a downtrend as the CCI remained below the zero line. Then on this candle, the CCI finally breaks above the zero line. According to the general rule, when the price breaks above the zero line, it is considered to be an uptrend. But if we bought on this candle, we would have incurred a loss, as the price made 3 consecutive red candles after our entry. But as I said earlier, we want to see the CCI to sustain above the zero line for at least 6 to 8 candles in order for us to consider it as an uptrend. So we would not have considered an uptrend after this candle. Our uptrend signal will be generated only after these set of candles that sustain above the zero line on CCI. Now let's look at an example of a downtrend. On this chart, we see that around these candles we get a signal for a downtrend. This is because the CCI line successfully sustained below the zero line for about 6 to 8 candles. After that, we saw a steady down move that lasted for over few weeks. So the placement of the CCI will help us in identifying the trend. When the CCI has sustained and is trading above the zero line, this shows us that the price is in an uptrend. Similarly, when the CCI has sustained and is trading below the zero line, this indicates the price is in a downtrend. Remember, we will not simply enter when we get a signal for an uptrend or downtrend. We want to wait for other confirmations to enter. Now let's understand how to identify specific entry points to enter in an uptrend. As I said before, 75% of the time, the CCI will stay within the range of plus 100 and minus 100. When the CCI exceeds beyond that price range, we will see a strong momentum in the trend of the market. Therefore, whenever the price exceeds this range, we will look for an entry. This means, if the price breaks above the plus 100 line, we can enter a long trade. And if the price breaks below the minus 100 line, we can enter a short trade. This is a simple entry technique. But a point to remember here is that we want to only trade in the direction of the existing trend. Let me explain this with an example. Look at this chart. Here we see that for the most part, the CCI has consistently stayed above the zero line. This means that the price is in an uptrend. Now, all of a sudden, the price breaks below the zero line and crosses the minus 100 level. So what should we do? Should we sell? The answer is no, we should not sell. This is because the CCI has not spent at least 6 to 8 candles below the zero line. Which means that we still believe that the price is in an uptrend. Therefore, in an uptrend we will avoid any sell signals. And as you can see, had we sold here, we would have incurred a loss as the price made a massive up move. If the CCI does spend 6 to 8 candles below the zero line, then it will be declared as a downtrend. After that point we can sell at minus 100 crossovers. Let's look at some chart examples to understand this. Here on this chart, we will first identify the trend. As you can see, the CCI line throughout the chart has been above the zero line. This shows us that the price is in a strong uptrend. In an uptrend like this, we want to look for buying opportunities only. Then, at this point, we see the CCI line cross above the plus 100 line. This indicates that there has been an increase in momentum of the uptrend. Therefore, this is a good entry point to enter the market. Let's look at a bearish example. On this chart, we saw that the CCI was consistently trading below the zero line. This shows that the price is in a sustainable downtrend. Then on this candle, we see that the CCI line crosses below the minus 100 line. This is a good entry point for us to enter the downtrend. And as you can see, the price just exploded to the downside after this signal. Now, let's look at the last use of the CCI indicator. That is, how to identify potential areas of reversals using the CCI. If you study the CCI for long enough, you will realize that the CCI line stays within the plus 200 and minus 200 range for 95% of the time. When the price does go beyond this range, we often see immediate reversals take place. This is because the 200 mark is an extreme reading. It shows that the market participants have become euphoric and they feel that the trend will never end. And most of the time, this is that stage where the markets reverse. For instance, look at this chart. On this chart, I have removed the plus 100 and minus 100 lines. Instead, I have plotted the plus 200 and minus 200 lines, so that it becomes easy. As you can see at this point, we see that the CCI crosses below the minus 200 line. This is a strong sign that the downwards move may be over, and the price might shoot up instead. If we look at the candles, we also have a doji candlestick formation occurring right when the CCI moves below minus 200. The following candle is also a doji candle that is completely inside the range of the previous candle. The candlestick patterns show that the bears might have lost momentum and the bulls might come in and take the prices higher. So this would be a good entry point. And as you can see, the price immediately reversed and made an up move. Now let's look at a bearish trade example. On this chart we see that around this price area the CCI crosses above the plus 200 level. This means that the price has become overextended to the upside. Therefore, we can expect the market to make a down move. If we look at the price action on the chart, we can see that the signal occurred right at the area where the price has faced rejection previously. Then, we can also see the price has formed an inside bar that adds further confirmation to our bias. So this was a perfect opportunity to short the market. And as you can see, the price tanked after this signal. So that brings us to the end of this video. In this video, I have explained everything I know about the CCI indicator. I just hope that you found this information useful, and you can use this information to create a strategy that you find useful. If you liked this video, then be sure to hit that like button and subscribe to our channel, so that you don't miss on any of our new video. See you soon.